Welcome back to Take 10. Lisa Wiles,
Corey Freels.
bringing it to you.
Here we go.
One extra thing to help you get one more deal and a lot of good information to make you sound like the smartest person in the room
Which we know you are.
already.
We just want other people to know it.
Yeah, give you
All
a little
right.
street cred.
Let's
You know
go.
what I mean? Let's talk market.
Let's talk it. Interest rates, 30-year fixed today is sitting at 6.159, near the lowest level of 2 years.
According to
The Optimal Blue Mortgage Market Index. This is the pricing engine we use to price loans. 35% of all loans across the country run through here. And that's everything from credit unions and banks to builders that buy rates down for people to, everybody.
It's just a nice average in a cross section.
It's nice to watch a trend.
It's yes.
So
we follow one group to watch the trends.
That's right. So we're quoting lots of 20s and the 5s. The 20-year is a magic trick.
Can I tell you
It's
how
Lisa's
much
favorite.
I love the 20-year fixed? Because you get to take the first 10 years of interest out of the picture, which is the most interest-heavy piece
That's right.
of a 30-year fixed loan.
Yep.
$100,000 plus in savings just by taking those first 10
It's
years
huge.
off. And what I just found yesterday, which is super cool, and it depends on your loan size and things like that. But if you have a rate on a 30, like in the sevens, you could probably get into, depending on your loan size and whatnot, play with the numbers, and you can get pretty close to being able to have the exact same payment and go to a 20.
That's right. Massive savings, guys.
Massive savings.
And not even like, I think a lot of people are like,
Effective.
oh, I'll never pay it off anyway. I'll do a 30. Well, the amount of loan that you pay down on a 20 in like 5 years, the
Mhm.
difference in equity that you have in 5 years when you plan to move or sell, huge. Game changer.
Game changer. And you're basically turning your house into a savings account.
That's right. It's
And
forced
every
savings.
payment that you make is a more effective payment and you get more of that money back.
That's right.
So why would that ever be a bad idea?
It's great. So we love the 20-year.
We
We're
love
looking at
it.
that a lot.
We do.
Where do we think rates are going to go? This is really important.
Okay.
No one knows.
Ah, perfect.
Yeah.
Moving on.
No one knows.
Just kidding.
But there are really smart people that try to forecast it, right?
Mhm.
And so last week was the Mortgage Bankers Association conference in Vegas. I'm sure you've heard of it.
Scintillating.
Riveting. Everyone wants to
Yeah.
go. Anyone was there. I was not. But the chief economist of the Mortgage Bankers Association, it's like the Realtors Association for you guys.
Yeah.
Is that NAR? It's like NAR for you guys. MBA is that for us. He forecasted interest rates to stay between 6 and 6.5 through 2028.
And
Now,
that's
mind
the
you,
30-year fixed.
So that is, mind you, that is
Wait, we're 2025. So you're telling me it's not going to drop?
till 2028.
And they're saying that because?
Tariffs and inflation. So
Yeah.
inflation starting to
Inflation.
rear its head back. Tariffs are a big picture item that are pushing prices higher and therefore
And
interest
kind of
rates.
like new territory, right? Like you have to wait and see how these things are actually going to impact the economy when they are done in such a rash, quick way at such a large scale.
That's right. And let's just put a little caveat. That's a long time from now for crazy things to happen we
Mhm.
never saw coming. Nobody saw COVID happening. Most people didn't see the '08 financial crisis happen, which is when interest rates really got pushed lower. However, the message is the same. Based on what we know today,
Mhm.
we're near the bottom of the range that anyone expects through 2028. Even Fannie Mae is like 5.9 next year, not far out of where we are at 6.125 today, right?
Mhm.
And we're coming into the fall. We have aging inventory. We have sellers that are willing to work with you.
Mhm.
It is an amazing time. It is a really good time for buyers to take advantage of this.
Yep. And we do have a link that we can also put with the show notes to the article that you found
That's right.
about that references the interest rates
That's right.
staying higher.
Yeah. So you can give this to your clients. You're like, hey, this is not me saying it. It's them saying it.
Mhm.
It's
Good
just data,
information.
right? And so while we're on that topic, I want to touch on something that resurfaced for me and that we're starting to see again. When we have houses we can negotiate on,
Mhm.
the most valuable thing we can negotiate is a seller credit, and a big one.
Mhm.
So, I mean, I had one this week where we pitched, the buyer was wanting to go in at like 420 on a 440 listing.
Mhm.
And I modeled it for them, instead going in at 440, but asking for 20,000 in seller pays, which you can do because of their down payment. And we took that money and bought their rate down to less than 5%.
Well, Let's go. That's
So
cool.
literally they can have the interest rate today if they have the negotiating power that we may never see again, but certainly not for the next few
And
years.
guess what? That payment was probably lower.
It was. It was lower by doing that and buying the rate down than
Mhm.
actually negotiating the price lower.
Yep.
So it's every situation's a little different.
Sure.
Like if you're putting a lot of money down, maybe not. However, that opportunity's there. And again, back to what we just said, lowest rates we've seen in 2 years, very
Mhm.
close.
Yep.
More inventory than we've seen in 6. It's time.
And if you have some buyers that got pre-approved back in March to May, have them reach back out to their
Yes.
lenders and get their price points pushed up
Yes.
because that's where we're at. I just pushed up one of my clients from 285 to 315.
Yeah. And that's a
And
big, you open up a lot of opportunities for that.
you guys know that, right?
Yep.
So send your buyers back over to their lenders or send them to us. We'll get everything, the dust blown off, and actually figure out what they could buy in today's market because it will be higher than what they could buy as a max, even as, up to June,
That's right.
July.
That's
So
right. Yeah.
anyway,
So
something to look at.
government shutdown,
How much fun is this?
23 days in now.
Yeah. But who's counting?
Air traffic controllers are no longer getting paid. So hopefully they continue to come to work. Seriously, they're not getting paid
Yeah.
anymore. So hopefully they keep coming to work so we can all fly places.
So one of the concerns is, Corey, like we have government loans. We have VA, we have FHA, we have USDA, we have all the letters, THDA. Which ones are being impacted by this shutdown?
USDA for sure.
Is that it?
Mostly. I mean, you'll see some delays in communication from VA and FHA, but like USDA is at a dead stop.
Is And that, guys, is because once the lender gets the entire file approved through rural housing, we have to send it to rural housing for the government to approve our
That's
package
right.
in order to get the money, in order to close the loan. And so if nothing is going to be getting approved right now, the loans aren't going away, they're stacking up.
Yep.
And so even when the government opens back, your file may be 20 piles deep.
That's right.
So maybe come up with an alternate plan. And we do have a lot of really cool 100% loan programs that emulate that rural housing program using down payment assistance,
Yep.
maybe. But however we can get the client to the finish line, they can always down the road refinance out of something if,
Sure.
as equity grows and
Yeah.
more opportunities exist.
Yep.
So don't be caught. Understand if you put USDA on your contract, you need to come up with a backup plan
That's right.
if you want to close on time.
Yep.
Maybe the backup plan's a contract extension, but get it in place so you don't have issues.
That's right.
Yep. Ooh, also in today's news, we are doing a higher conforming loan limit.
Yes.
We're already bear hugging what we think is going to be 2026. And that loan limit is 830,695
Yep.
already effective.
That's massive.
And do you know what that means? You
What
can
does that
put
mean?
5% down and on a house that's $874,000.
That's crazy.
Let's go.
What was it when you started? Do you remember the conforming limit when you started in the business?
Yeah, I think it was 286, I think.
Yeah. It was 417. Yeah. Yeah.
Yours
It
was
was
417?
417 was it for me.
I think mine was 286.
Yeah. Crazy.
Or 312.
Crazy
Some
to see what's
weirdo.
grown.
Why are all the numbers always weird? We can talk
And
about that
basically
another
what
time.
that means, conforming loan limit, it means that we can do a conventional loan to Fannie Mae, Freddie Mac.
Mhm. Better rates, better terms.
Easier to underwrite.
Mhm.
It's just a massive, massive
Mhm.
pool of buyer. Anyway, it's great.
Let's jump into one last thing on
Yep.
VA.
Yes.
We just
okay.
had this.
So we just had this on new construction where a VA appraiser had noted that there was bare concrete in the basement,
Mhm.
which I've been in $3 million houses with polished concretes
It's
in the
beautiful.
basement.
I
It's
love it.
beautiful. It looks great,
Yeah.
right? Not that big a deal. But the VA appraiser made the appraisal subject to that. And
To
so it was going to
flooring.
delay a closing,
Yeah.
right? So we dug in and went to our underwriting. If it's not in the sales contract that you have to have flooring, then we were okay with that. And we moved past it.
And we moved on. Isn't that nice? Nobody had to put floors down or finish the floors to close.
That's right.
So ask the question.
Ask the
Push
question.
back if you don't like the answer.
Sure.
And get the answer you need / want.
That's right. I think in another life, I probably would have just been like, oh, we got to put a floor down. But
Not anymore.
not anymore. Let's ask the
Um,
question.
and then we have a lot of events coming up.
We do. We are sponsoring Fall Fest, which is super fun. It's an event put on by the AMBC, Appalachian Mountain Biking Club.
And it was one of our nonprofits that we decided to support.
That's right.
So we're going to be
We
all
give
in support.
$50 a loan that we close to a nonprofit every month.
Mhm.
Our loan officers donate out of their pay, and then the branch matches it. And so that was who we supported. They're awesome. They take care of all of our trails around here, which we spend a lot of time on these trails. The urban wilderness is just gorgeous and such a treasure to us. So we love AMBC. They're great. On the 31st, which is Halloween, holy moly, they start Fall Fest, and it goes the 31st to the 1st, and then it ends on Sunday the 2nd, or is it done Saturday night? Yeah.
So
But
check
it
it
is
out.
a blast. It's at Baker Creek. It's so fun. Bring the kids. Yeah, South Knoxville, if you don't know where that is. It is just take James White till it stops. And anyway, it's gorgeous, so fun. Kids have a blast. So come see us out there. We'll have a tent. We'll be popping in and out as the weekend goes because it is Halloween. Right?
And something even cooler that's happening tomorrow, which is Friday, the 24th, is Becca, our very own Becca, is on a panel for the East Tennessee Realtors Educational Summit.
That's right. So Becca's going to be there. AI and social.
At 3:20 is her time
3:20.
slot.
So
show
block
up to
it
that
off.
for sure because
You don't
all
come to
sorts of good
anything else.
nuggets.
I wouldn't, if I'm coming to anything, I'm coming to that one.
We may sneak in.
We may sneak in. We're not invited.
Yeah.
But we may be there anyway.
With a boat horn
Yes.
in the back.
And cheering. So if you want to see us, we'll be there. We're past time.
Okay.
We work weekends,
Nights,
after hours,
holidays.
at themortgagegallery.com.
Yes.
Shoot us an email. I'll come loan officer to be there to help you. Thank you. Have a great weekend.